The Reserve Bank coming out with its draft set of guidelines for new bank licenses soon. It could be by the end of this week as well. But we're asking whether the RBI will go soft on corporates seeking licenses. We'll be joined by Ashwin Parekh, partner Global Financial Services at EY, and we also have our banking editor George Cherian joining in. George, let me begin with you. Of course, the big question that we're asking is what is the expectation as far as those guidelines for bank license are concerned, and essentially when it comes to corporate houses, what kind of a stand could the central bank take?
Well, Shivani, like you said, that those guidelines are expected out either today or latest by tomorrow. At least that's what the RBI governor told us last week. Now, the expectation is that capital requirements for banks that get new licenses will be significantly higher than what it was when the 3rd January 2001 guideline was put out, when banks were required to bring in a minimum of 200 crores. The expectation is that it will be at 500 crores. And the big question, like that you just mentioned, is of course whether the RBI will go soft on corporates. Now, this is something that we'd asked the RBI governor only in April, and he said do not expect the RBI to go soft on corporates in any manner. So it will be interesting to see what the guidelines actually say in terms of corporates looking to get into this sector. But of course, we've got Ashwin Parekh here with us, who will take us through that in greater detail. Shivani.
Right, George. Of course, so you've set the discussion stage really on what most of these NBFCs and corporate houses are expecting. Now, Ashwin, let me bring you into the discussion. And first of all, let's look at the scenario that we currently have close to about 100 commercial banks operating in India. There are some who believe that we have too few banks, and there are others who insist that there are too many already operational. Which side are you on?
Well, I seem to be of the view that, there are three factors which lead me to believe that the number of banks could increase. We need more banks. We need more mid-sized banks, so they can start off with small size, but they need to become mid-size in a span of time. Three factors. One is the capital requirement in the banking system is of the order of about between 20 to 30 billion US dollars, and that's huge capital. Now, with the government taking a certain view on that 51% holding in the public sector banks, and they will certainly go a little easy on putting more capital into or allowing the public sector banks to raise much more capital, So there is a need for more banks on that account. The second is the inclusion part, and we are very glad that both the government and the regulator has taken the inclusion part very seriously. After the last two reports which came out, we are now seeing that there is an emphasis on going out to the geographies, going out to the rural markets, and really covering as many, making banking accessible to more people. So there is the second important part. And the third important part, to my mind, is the aspect of Basel II norms, which will require more capital in the banking system. These things do lead us to believe, that there is there's a need for, more banking companies in the country. There will be therefore, perhaps that kind of a view that will really prevail in the new policy, draft policy discussion paper that is going to come out.
Right, Ashwin, but minimum capital for new banks is likely to be set at 500 crore rupees. So would you agree that this is too little, considering that the last set of guidelines put out in January 2001 required a minimum capital of 200 crores, and since then the value of money has eroded and the risks and complexities of the banking business have only increased?
No, absolutely. There is a need for more capital. There is a need to do two things, perhaps, and we might see this, in the policy, draft policy that comes out tomorrow. But we might, there is a need to show capital of the order of at least 500 crores today, and also need to show that there is, on the part of the person who's applying for the banking license, the ability to raise about 1,000 crores or provide 1,000 crores into the banking in a span of 3 years' time. So if I take the normal credit growth and the growth of the loan book that may happen to a bank which starts off with 500 crores, and then it will be required to grow up to 1,000 crores, at the normal rate of about 26 to 27% of credit growth on one side and the inclusion part on the other. If I look at the earlier norms also, there was a mention of 200 crores to begin with, but additional 100 crore in a year's time. So we were looking at 200 to 300 crores in the first year, year 0 and year 1. In any case, we could be looking at 500 to 1,000 crores, in this situation.
Right now, Ashwin, everyone's expecting a lot of emphasis being placed on reaching out to the unbanked parts of the country. Should we then expect that microfinance companies like SKS and Basics actually stand a very strong chance of getting licenses?
Well, banking and microfinance are two different aspects. So let's look at you know, the play. It's a different play altogether. You're looking at a high order of deposit taking over here, whereas in case of MFs, it's a very different approach altogether. I mean, I'm saying that they stand a chance, but at the same time, they do not necessarily justify. I mean, they have a larger play in the microfinance. They can continue with that play. Would they want to really become banks and subject themselves to far more stringent regulations compared to what they have when they are, let's say, NBFCs and when they are doing the microfinance activities, is something that needs to be seen. I mean, we'll have to see what the draft comes out with. But I'm saying that there's not a natural fit, I mean, you know.
Right. Now, we did mention, of course, Ashwin, that the RBI governor has come out very strongly saying that one should not expect any sort of relaxations being made for corporates seeking licenses. But what do you expect the restrictions imposed on such players will be? Because, of course, there is the government that is keen on industry houses, corporate houses being given license. So would the RBI opt for stability within the banking system over growth?
Well, yes, I mean, that seems to be the real underlying issue. The underlying issue is, on one side, the government would be very eager, you know, that the economic growth is fueled by, you know, the credit provided by banking system. And therefore, they would be very eager that more capital flows into banking through more licenses, you know, which in turn therefore requires, you know, that the established reputed corporates who have a long, strong presence over here in the country, sort of, you know, could be allowed, should be allowed to participate in providing that capital to the banking system. So there can be one view on that. The regulator will look at the stability. He'll certainly look at the stability. He will also look at any kind of contagion risk that, let's say, an industrial house or a corporate may carry on his balance sheet. He has to worry whether, I mean, that risk should not flow into the balance sheet's bank. I mean, you know, the bank's balance sheet. So these are some of the issues that will, size of the corporate, you know, could play an important role.